Hey everyone, welcome back to the channel. Today we're diving into one of the most talked about EV stocks in the market, NIO. If you've been following the electric vehicle space, you know that NIO has captured the attention of retail and institutional investors alike. But the big question now is, what's next? In this video, we're going to break down everything happening with NIO stock, the company's latest business developments, production progress, financial health, market strategy, and the sentiment driving investors. Whether you're long on NIO or just trying to understand the hype, you'll want to stick around. Let's get into it. NIO is often referred to as the Tesla of China. And while that comparison has some truth to it, NIO is carving out its own unique identity. The company was founded with a mission to redefine the premium EV experience, and that includes not just vehicles, but technology, design, user service, and even lifestyle branding. NIO's main market is China, the largest EV market in the world. And that gives the company a huge opportunity. But it also means intense competition, from Tesla, from Chinese brands like BYD, XPeng, and Li Auto, and from traditional automakers moving into the EV space. So how is NIO holding up? Let's start with the cars. NIO has expanded its product lineup significantly. It started with the ES8, then added the ES6, the EC6 Coupe SUV, the ET7 luxury sedan, and the more affordable ET5, which has been getting strong reviews for its design, performance, and range. The lineup now includes both SUVs and sedans, targeting multiple segments of the market. What really makes NIO stand out, though, is its battery swap technology. Instead of charging your vehicle, NIO drivers can pull into a swap station and have a fully charged battery installed in just a few minutes. It's fast, convenient, and unique, and NIO is betting big on it. They've already built hundreds of these battery swap stations across China and are beginning to expand them into European markets as well. While the upfront cost of building these stations is high, NIO believes it creates long-term value through customer loyalty and convenience. And speaking of Europe, yes, NIO is going global. The company has launched in Norway, Germany, the Netherlands, and a few other European countries. It's positioning itself as a premium EV brand in these markets, going head-to-head with European automakers like BMW, Mercedes, and Audi. That's a bold move, and it's not without challenges. But it shows NIO's ambition to become a global player. Now let's look at production. Production capacity has been growing. NIO has a joint manufacturing arrangement with JAC Motors, and the company recently opened a second factory, known as NIO Park, in Hefei. This facility gives NIO more control over its supply chain and the ability to scale up production more efficiently. Production numbers have been rising year over year, though they've faced some headwinds. Like most automakers, NIO has dealt with global chip shortages, supply chain disruptions, and lockdown-related slowdowns in China. These issues have impacted delivery timelines and production targets. Even so, the trend is upward. Delivery numbers have been climbing, and NIO is positioning itself to compete not just in China, but globally. Now, let's talk money. Financially, NIO is still in growth mode, and that means it's not yet profitable. The company generates revenue primarily from vehicle sales, but also from services, including battery-as-a-service subscriptions and extended warranties. Gross margins have fluctuated over the past few quarters. Rising material costs, increased R&D spending, and competition have put pressure on profitability. But NIO continues to invest heavily in its future, expanding its product line, building infrastructure, and developing autonomous driving capabilities. NIO's balance sheet is solid for a growth company. It has raised capital multiple times, including through US and Hong Kong listings, and maintains a healthy cash position. But it also burns a lot of cash, which is typical for an EV startup aggressively scaling. So what about stock performance? NIO's stock has been on a wild ride. It exploded in 2020, hitting all-time highs as investor excitement around EVs surged. Since then, it has come back down, impacted by macroeconomic factors, concerns over China's regulatory environment, and a broader sell-off in growth stocks. But many investors still believe in the long-term story. They see NIO as a high-risk, high-reward play, a company that could grow into a major global automaker if it executes well. Let's talk about sentiment. Retail investors remain interested in NIO. It's frequently discussed on forums, stock trading apps, and social media. There's a loyal base of supporters who believe NIO is undervalued and that the market is overlooking its potential. At the same time, institutional interest has been mixed. Some big funds have taken positions in NIO, while others have sold out during volatility. Short interest has also varied, not as high as some meme stocks, but still present, especially during periods of negative sentiment around China or EV demand. From a technical analysis perspective, NIO has shown strong support and resistance levels over time. It's a stock that often moves on sentiment, macro news, and earnings guidance. Traders watch closely for delivery numbers, new vehicle launches, and updates from CEO William Li. Now, let's touch on the competitive landscape. Tesla is still a major player in China, and Elon Musk's aggressive pricing strategy has put pressure on all competitors, including NIO. Other Chinese EV companies like BYD and XPeng are growing fast and launching their own advanced tech features. But NIO has one big edge: branding. It markets itself as a lifestyle brand, not just a car company. NIO houses, which are luxury showrooms combined with cafes, lounges, and workspaces, offer an experience that few automakers can match. It's a unique strategy that blends community, tech, and service. So, what should you watch moving forward? First, delivery numbers. Each quarter, investors want to see consistent growth. That's the clearest sign of customer demand. Second, new model rollouts. NIO has teased future launches, possibly a mass-market sub-brand that could compete on price with more affordable EVs. Third, international expansion. How quickly can NIO scale in Europe, and will it try to enter North America in the near future? And finally, margins. Can NIO get closer to profitability without compromising on quality or innovation? Like any stock, NIO carries risk. It's tied to Chinese policy, global market sentiment, and supply chain dynamics. But it also has vision, capital, and a growing customer base. If the company continues to innovate and execute, it has the potential to become a global force in the EV industry. So to sum it up, NIO is still in the game. It's still building, still expanding, and still pushing boundaries. The road ahead may be bumpy, but for long-term. Thanks for sticking around through this in-depth breakdown. If you got value from this video, make sure to hit that like button, subscribe if you haven't already, and share this with anyone tracking the EV space. And now I want to hear from you. Are you investing in NIO right now? Are you holding long-term, trading short-term, or waiting on the sidelines? Drop your thoughts in the comments. I'd love to hear your perspective. Thanks again for watching, and I'll catch you in the next one.